Now, most people have access to a limited source of relationships. The gentleman I'm bringing on is part of a venture capital firm, so they get a lot. They just kind of know what's coming, right? And I'm going to bring on Nick. He's going to talk about the state of multifamily tech. You see, multifamily has historically been a very low risk asset class. We're talking to investors, right? You have office and retail that's, things are changing, but everybody has to have a place to live, and you can even go into Class B properties and say that's even better than Class A, but multifamily has been a low-risk asset class. But multifamily operators are facing new challenges, and this risks things that they've really never seen before, right? This whole world that we just went through, this whole shift. New risks come alive. So joining us today is Nick Durham. He's the senior associate at Shadow Ventures. Nick, welcome in.
Hey, Patrick. Thanks for having me.
Yeah. Sorry, I'm getting set up here. Quite the show yesterday, and a lot of people really pinging me that they're looking forward to sharing the time with you. I mean, one of the things we don't do in our brands, we don't do predictions and even recommendations because that really falls on people. But I'm interested. I read your report. Wanted to bring you on and talk about the state of multifamily tech and spend some time together.
Sounds great. I have to ask too. In a past life, did you serve as a news anchor?
No.
You have that presence.
No, but I will tell you, and this goes with innovation. The more you do things, the more you get to mess it up. And then you get to learn about, don't do that again.
Yeah, we were actually talking about this yesterday internally. It's like innovation occurs in thousands of iterations, not, there's no really ever a breakthrough moment. It happens with a ton of failures over time. So it sounds like you've failed a lot on the media front, and look at you now.
Yep, appreciate that. Awesome. So where should we get started? Let's talk about this state. The multifamily tech. Do you want to open up?
Yeah, sure. So I don't know if most people here have had a chance to, kind of look at the report, but just to back up a step and kind of talk about what it is. You framed it pretty well. We basically, we sat here last fall, Shadow Ventures, our venture capital firm, and we were trying to figure out our strategy. I appreciated some of your context on, as a media company, really having to think through how you're going to reinvent yourself. As a vendor, how do you market to an audience when basically every channel of marketing over the past year was somewhat destroyed? So for us, we took a step back and said, our business has shifted. What we were excited about investing in previously, before the pandemic hit, that's changed. And multifamily being a clustering that we see as a prop tech VC. So just so everyone knows, we're exclusively focused on investing in real estate technologies, and we do very early stage investments. So what we call seed stage. So we invest very early. We have to be, kind of very forward looking when we make investments. We can't invest in a technology that's already kind of proved itself, if you will. We have to invest in something that really hasn't, that the market hasn't found interesting yet. That's where we make our returns. So we took a look at multifamily because we're prop tech focused. And I think multifamily was in this really unique moment in time with the pandemic, when traditional commercial real estate assets were probably the most disrupted thing on the planet. You talk about offices, you talk about retail. Talk about disruption. Literally went from, 80 to 100% occupancy to 0% overnight. And multifamily being this, this investment asset class that, basically kind of saw the exact opposite, where, occupancy was good. Multifamily had been thriving for, close to a decade, but there was all these new behavioral dynamics. Everyone was in their apartment 100% of the time, for probably the first time ever.
Yeah.
Right. And so that just creates a whole host of new things to solve for owners and operators. And we found that to be a really interesting technology challenge, right? And we'll get into this in a second, but a lot of uncertainty hit multifamily. It wasn't as bad as other markets because people were spending time there, and people will always need a place to live. They may not need to go into the office in the future. We can debate that, but they need a place to live. And I don't think anyone's, in a position in our current economy where like it's going to be a mad rush to put a huge down payment on a house. The rent economy, and you look at some of the unemployment numbers, like people are going to have to rent for a certain period of time. So we looked at the multifamily tech scene as a pretty safe place to kind of allocate capital to. We saw a lot of interesting innovations, and the tech report is kind of examining that, but first kind of starting at from a top-down perspective of what's happening in multifamily, what are the risks, and how is technology going to solve some of those problems?
Yeah, so you think about, like you said, that uncertainty. Now, the multifamily industry was less set up for success like the restaurants, where they at least had Uber Eats and a way to move product around, and the technology actually kept them. I mean, I would imagine if an innovation like an Uber Eats or DoorDash, all these home delivery things were not in place, what would have happened to all the restaurants, right?
For sure, yeah. No, I mean, very, very much that infrastructure was already kind of built out, and it was, when the pandemic hit, there was a mad rush and an acceleration to adopt those technologies, and mainly out of necessity, right? Like, I don't think many people were very comfortable early March and April, like going out every day, getting food and or going to the grocery. Like, that didn't feel comfortable. I was in a city. I was living in Chicago, and like I didn't feel comfortable going to a grocery store that was packed with people, not really understanding like how the virus is spreading and all those sorts of things. But I think your point is like the infrastructure was built on the food delivery side. And I also think like you look at the work from home trend, that infrastructure was built too. Like Zoom existed before, but before the pandemic, and it was just completely, everyone switched to doing Zoom calls versus doing in-person meetings or even phone calls because it gave them a very personal feel, and the performance is outstanding. Like Zoom's great. Yeah. And I think the world kind of discovered that. But multifamily tech too. Like I think you look at some of the technologies that have been really thriving, and I'll just give an example because I think this is like a super easy to understand thing. Like self-guided tours, for instance, in multifamily, that was a necessity, right? You didn't want to have people touring, call it virtual touring and or self-guided tours. Like there wasn't a lot of excitement about going to meet a leasing agent and viewing an apartment in person, even though you might have needed to figure out a living situation. People's leases might have been up, and like this, they still have to go through their lives and find a place to live. So like, how do you bridge that gap? And the answer is, we're biased, of course, but the answer is technology.
Yeah, so I think you said Zoom, and honestly, I remember even before COVID, I did have a lot of conference calls, but at that time it was like, sure. If I would have said Zoom, and it would have been more like awkward, like people would still not have their cameras on and all that kind of stuff. But now I don't think I've ever done, I think I maybe have done one or two conference calls. I think it was with a big lender, that type of thing. But the Skype was there all along. What did Skype miss? I mean, were they too much technical debt? And what do you see with these people that come to you with these big ideas at the early stage that maybe multifamily operators are missing?
Yeah, I mean, the Skype example is a good one. I mean, I remember when I was in college, I was an avid user of Skype. I left my home state and I moved somewhat far away for college. So that's how I kind of kept in touch with my family. And Zoom didn't exist then. Google Meets didn't exist then. So they had this massive head start and they blew it. I think they blew it in large part to poor performance, lack of understanding how that core audience wants to use, what the user experience basically should be and feel like. But I think you look at what allowed Zoom to win. I think most people would tell you it's the performance of the of their video compared to other services, it's pretty dramatically improved. And I'm sure like now we'll start buffering and like we'll lose the call since we're doing this on Zoom. Hopefully I didn't jinx it, but yeah, I mean, so just to apply that logic to how we look at startups and some of the companies specifically in multifamily tech. I think I'll say this. I think Zoom saw an opportunity. I know Eric Yuan's story. I actually talked to a Chinese group last week who I think was the first seed check into Zoom. And Eric Yuan's pitch was like, I'm going to do video better than all these like very well capitalized companies because in my competitive advantage is going to be it's going to perform better. And so he had a really tough time raising money with that pitch, so the legend goes. But he was right, and I think that as investors and like applying this to our industry, when we hear a pitch from a startup, like it's our job to really dig into the words that they're saying, and know the market dynamics to understand if that's true or not. Because like I think if you dug into his pitch, you actually would understand like there actually is a pretty solid greenfield opportunity in video, and maybe there's multiple winners, right? Maybe even if Zoom isn't the biggest video conference player in the world like it is now, maybe they're second to Google, and that's not such a terrible outcome,
right?
So we have to really dig in to understand like current user experience, how products and feature sets are evolving, functionality. I think you look at this is thrown out a lot in Silicon Valley, but like a 10x product improvement. Like is this advancement? And I imagine like a lot of multifamily operators who are listening in on this call, they understand this pain. They get pitched all day by point solutions and vendors, right? If that solution is not a 10x improvement on your current state of being, you're not going to adopt it, because it's just not worth the pain of like, setting up another login, another software and connecting it to Yardi or Real Page. It's just not worth going through that change management pain. So like what you end up doing is you say no. And so our job is to figure out like what are those 10x improvements that when you get pitched and you see it, instantly that is something like that is going to take off in the market. And that's something I'm going to use regardless of the price. Like, I don't care. That solves like such a significant pain for me that I'm going to do it.
Yeah. It's interesting. There was a new app on voice, basically like think of it like radio or live podcasting, Clubhouse, which was early launched, invite only community. And I think they launched with just the iOS app. And so a lot of people were like FOMO, fear of missing out on this, and Android users that couldn't use it. And so I literally had comments of people that were saying, I got my wife, an iPhone just so then she can access this thing. And so I think about like, even when you're talking about startups, this idea of like one company solving all problems, Coke, Pepsi, has lived forever competing against each other. Like everybody knows Coke, everybody knows Pepsi. You go down the beer aisle and you see just millions of brands. Maybe not millions, but you get the pictures. A lot of brands and new iterations of things. And there's that like the Sam Adams that's like, I'm only 4 or 5% of the market, but most people know about who they are. Are we deciding about who we should work with too much emphasis on, well, they're the largest and they've got the greatest scale, or what? How should we be thinking about that?
Yeah, it's a good question. I mean, I think what you're speaking to is some hidden psychology and maybe some biases around social proof. For what it's worth, I think that's a very natural human behavior to want to see a solution that you're going to adopt validated by other people. One, as a buyer, it protects you from liability of like adopting it, paying a ton of money, going through the change internally, then it fails completely and you look terrible in front of your boss.
Yeah, it's that IBM story. What was it? Nobody got fired by going with IBM or whatever it was.
Yeah, right. Right, for sure.
Hey, Nick, real quick,
Yep.
people are asking, where can they get the report? I'll have someone put it in the comments.
So just go to our website. So it's shadow.vc.
Okay.
And if you click on the Insights tab on our website, it will be on that page. It's called The State of Multifamily Tech.
Great. Yeah, that's super helpful because I went through that. It was a great report. So congratulations on what you did there. Can we dive into sort of these risk factors that we've been talking about?
Yeah. Let's do that. So I think to walk it back. So commercial real estate is. A lot of us don't want to, admit this. We operate in microeconomies, but commercial real estate is largely, and real estate as a whole is largely influenced and correlated to macroeconomic trends, right? So when a pandemic hits, it's not only, obviously changing social behaviors. It actually it's affecting how investors are allocating capital. And I think it's a really, and there's all these, when investors are thinking about allocating capital, they're very much looking at what are the risk factors here and, within this particular market that I'm looking at. And I also think that last year, just one quick note on the macro trends, as an investor, we kind of entered this territory where there's a currency war going on. And I'm not talking about the U.S. versus China that plays a role too. I'm talking about the massive stimulus packages that came into play. As an institutional investor, which is a large allocator of multifamily capital, you have to evaluate forgive me for the aggressive term, but the debasement of money that occurred in the U.S. dollar last year, and you have to think through how am I going to achieve? Call it 20% is, I think, with the into money supply expanded last year. So if you're not getting returns at 20% or better, you lost money as an investor. So they're looking at multifamily and saying, hey, can I get that? Can I meet that 20% hurdle rate? And if they can't, and if there's a lot of new risk that they have to take to even get, call it 15, 17, 20%, they have to evaluate that pretty evenly. And so I think that was a scenario where the current, what's happening with our currency, and this still continues today, it's really making a lot of institutional investors, it's pushing them to invest more of their capital rather than keep it as dry powder and, quote unquote, a savings account. They're investing to get a pretty high yield to beat the inflation rate, right? So I think that's a pretty interesting thing. Risk factors that entered multifamily last year, health. I think first and foremost, health of the buildings and health of cities, like living in an urban environment, public health concerns, that was first and foremost the big thing, and we covered that in the piece. To neglect that would, that's kind of missing the point. I think secondly, there's a ton of concerns around rent collection and delinquency. I think that's a pretty obvious one too, but lots of unemployment. Questions around if the newly unemployed in a metropolitan city could meet rent obligations. Pretty big concern. I think you look at some of the data, it seems to be mostly alleviated based on some of the reports that you've heard. But for what it's worth, I'm a little skeptical on that. I think there's some of the sources that are reporting on rent collection and delinquency, I think they're a little bit biased. They tend to be pretty big real estate proponents. So I think the point is just be wary of what that actually is, and what the risks are there. I don't think we're completely out of the through that risk. Urban flight, right? So you're a multifamily owner investor in New York. A lot of people left New York City last year. A lot of people left San Francisco, and they're moving to markets like Nashville, Denver, Austin, Texas, right? So if that's happening, that doesn't mean they're leaving the U.S. and they're leaving cities. Right. They're just moving away from quote unquote, like a sure thing, such as like a multifamily apartment in the middle of Manhattan. Maybe not as much as a sure thing now. I don't know. We could debate that, right? But urban flight is a real thing. Moving to suburbs too is a thing. Not having to be in the middle of New York City to go to work every day. We've already talked about Zoom. Like, there's going to be undoubtedly a pretty big remote work shift, and there's going to be some, likely some flexible work trends, I think, for most people.
Yeah, it'll be interesting to watch that data, because even like in Phoenix, there's people living here, moving, buying homes, they're taking supply, but in many cases still working in San Fran, So where's the job?
That's right.
All that, it's interesting on that type of stuff. So if we're moving into we're already in this sort of uncertainty, and maybe what we have feels a little better than probably what's coming. You have to be prepared, like that's, as investment managers, that's really what we are. You have to think about impacts and due diligence of what might happen and predict to that. I think even I can't remember who it was, but the invert method, where they think about what they don't want to have happen, and then they plan to make sure that doesn't happen. And so, with all this uncertainty, how do you find the leverage, I guess, in everything, if it's currency or the ability to pay or the movement of jobs and knowing, like, how do I do my next deal? How do you find leverage, I guess?
Yeah. Well, I think for us, the easy and clear answer is tech, right? You find leverage in tech. And so why does technology act as a safe haven, and why do we see so much adoption accelerate during scary, uncertain periods? Well, the answer is, like, technology gives you leverage to curb inefficiencies. It allows you to reduce labor costs potentially through automation and digitization, software products, of course. It allows you to eliminate potential needless risks. So, for instance, just if you're looking at investing in a new property, a new site to do a development, I think during uncertain periods of time, like, you kind of want to be really sure that it's going to work out. So leveraging data, for instance, and using data science to really validate that decision, I think, is important. And I think the last piece is, like, it allows you to improve the day-to-day, satisfaction of your customers. So, multifamily being the residents being our customers, you can improve the experience through leveraging tech, experience, convenience, feeling of security and satisfaction. So that's typically why I think you see an acceleration. And I think, like, the other piece is human behavior during a crisis is to kind of triage and figure out what really matters. From a business perspective, what really matters to my bottom line and my balance sheet. How do I eliminate risks? And also, where aren't we optimized? I think, I imagine every major multifamily company, when the crisis hit, there's like an I look at it like everyone had a board meeting, there was an executive meeting, and you're running through financials. CFOs are running the company, and they're saying, like, how do we triage this and reduce the risk and focus on what matters? And a lot of times the solution ends up being, like, let's figure out how to leverage technology a little bit better to, one, get data to ensure and validate we're making the right decisions, and three, make sure that we're leveraged across the board to make sure our customers are being taken care of.
Yeah, and so thinking about that conversation, where do you even begin to? I mean, do people fully understand the stack of this tech, right? And where's that entry point? Where's that first thing that they need to do? And maybe even before taking action, what should they even be thinking about? Because I know you guys have done a great job. I've been following all of your summits and the things that you pay attention to. Now it's like, how do we get the executives to? I mean, we're running tech companies here, it seems like now, that have some real estate. Talk to us about the stack.
Yeah, well, I think the unique piece, and this is also the most challenging piece about adopting technology for real estate, is there's typically more nuanced layers, and the main reason being there's a physical asset that you have to integrate with, right? There's so much physicality in our industry that I think it's probably a big reason why we've been slow to adopt technology. Yeah. There's many different reasons. You look at fragmentation and lack of collaboration across stakeholders, but like largely too, you have to integrate with a physical asset. Like it's a massive artifact, and in order to fully get, again, to come back to data, like to collect data the right way, from an access control piece to like integrate with facilities and building management systems, like there's this nuanced layer in our market, and so that's the physical layer. But yeah, we typically look at it as three layers. There's a software layer, which is like kind of your basic project management systems, your basic softwares that you use to run your business. I know, Patrick, in the opening you mentioned, you guys rely on a lot of media tools, CRMs, different marketing tools, and for real estate owners and operators, I think like the central place and how they operate their business is through a portfolio or software or property management system. So Yardi, RealPage, Entrata, MRI, so some of those players, but. Yeah, and so you have the software layer, you have the physical layer, and again, the physical layer is going to be your facilities. It's the actual access to the building, maybe potentially, having technology in the units. You look at kind of what a smart rent is doing, placing IoT devices inside the actual units, and kind of throughout the building as well. And then I think the third piece, and people forget this too, is human capital. Right. So human capital is actually your staff on site and how they're communicating, your property managers, your regional managers, your maintenance staff, and how they're using and interacting with the technology. And I even think the other element there too is the residents, right? How they're interacting with the tech. So you have those three layers, and like if one of those three is off and not they're not incentivized to participate in whatever you've built, it creates problems, right? It creates problems and it infects the other two.
Right. I mean, you're developing technology. You need that feedback loop to iterate and, put it to the test, right? I mean, and I know you've built a lot in community. You're shaping some of that yourself. Yeah.
No, we've that's been really important to us at Shadow Ventures. Is we're investing in property tech and construction tech solutions, and I don't go to a job site every day. I imagine you're not at a development site every day. Maybe I'm wrong. Maybe you're an undercover developer, Patrick. But point is, like, there's a lot we don't know. We can pontificate and make great assumptions. But our community is, they're the group of people, our community, our investors, they're the group of people who are on the front lines using these technologies on a daily basis. So like getting valuable feedback, introducing our startups to that ecosystem, and vice versa, those professionals, that community, introducing their problems to our startups, it gets really interesting and compelling, and it creates a great positive feedback loop.
Yeah. Well, let's talk more about, I guess, the needs. If we're selling into multifamily, but we're also serving the end customer, the resident in many cases, and then also you have the investor customer. How do you shape up and describe like what you see the needs are now?
Yeah, and I look at it as when I created the report, I did like a hierarchy of needs, like Maslow's triangle. And so I'll kind of start at the base layer. So building and resident health was, I think, the most important thing for people last year, as it should be. I think secondly, I think from here on out, this is like kind of how we prioritize it, and I'd be curious to hear the audience feedback on if this was true for them. But I think taking care of existing residents, and really driving resident experience, making sure that with all these new options available, and maybe the media and their friends influencing them to leave their property, maybe move out to the suburbs, maybe move cities and states, ensuring some sort of brand loyalty and potentially driving a renewal. I think a big worry for a lot of operators last year is everyone's gonna leave, and I'm gonna have zero renewals. So I think resident experience and renewals were a thing. I think leasing and demand automation, I would put kind of next on the tier. If you have more people leaving and there is this urban flight happening, how do you ensure that you're creating top of funnel on the leasing side, and then you're converting those leads without having the ability for that prospective resident to go to the site, meet the leasing agent, meet the property manager, do the tourings, et cetera. For what it's worth, I started my career in college. I was a leasing agent, so I got pretty familiar with the leasing process, and it's exciting to see some of this being automated. Right. Again, I mentioned virtual leasing, becoming a pretty big thing, like having 3D visuals of the property and of the unit that you can go check out. Personally, I don't think I would sign up for. I don't think I would sign a lease without physically seeing the property. Who knows? But what that enables is a self-guided tour, right? I don't necessarily need the old 22-year-old college me to take a tour. Like, if you can enable me access through an application, and I can go see it myself, and I'm in a contained part of the space that doesn't feel risky, during the middle of a pandemic. That's pretty exciting. I think that's a pretty profound improvement. So my job in college was eliminated, but that's okay. Technology is deflationary, and we're gonna create new jobs out of this too. But so I think leasing and automation is the thing. So taking the full end-to-end sales experience. When a customer comes to your site, maybe they come through apartments.com, and then maybe they're signing up all and doing that experience all virtually. I think that's pretty exciting. I think the other thing is actually there's your current technology stack, optimizing that stack. So am I using the correct property management system? Am I not getting enough leverage out of that currently? Am I using an outdated and antiquated system? So I think there's a lot of reevaluation of the basic things that they were doing. And that's kind of what I was speaking to on triage. I think the last piece is data science. So data science for site selection. So the investors and the owners who were ambitious when blood was in the street, and they were saying we want to go capitalize on some buying opportunities that we're seeing out here. I think they approached it very cautiously. It wasn't as much of a sure thing. They had to make sure that there's really great growth within a neighborhood, a city, a development area. So they're using data to validate those decisions. And I think they're more and more we're seeing people are questioning their gut instinct in critical times, right? So I think that's the last piece.
Yeah, it's interesting, and even going back to your point on the leasing agent or professional. And the lease itself, even signing it, I opened my remarks yesterday at the top of the show around this first principle thinking, and it was mostly, the analogy was, how Elon Musk looked at building rockets, and he's like, can we reuse these things? You know what I mean? Why do we have to, why can't we just re-land them? And so he's able to test them where others can't. And so. It's like the lease. Why do we even need a lease? I know that we've always done that, and I look at what happened with T-Mobile disrupting. I mean, you go back in the day, you had long-term contracts on mobile devices, cell phones, and I think even the way that we paid for the thing and had agreements around them. Now it's just you always have a cell phone bill, and it probably always includes the most recent updated phone. And so the contract thing is like, let's just get that out of the way. And I know lenders drive a lot of those things, thinking about, well, we don't want everybody moving at the same time, and it's like that those thinking processes. I just wonder like how those play out in the way that ideas get created before they come into your office to pitch. But
that's a totally real thing. I think like it's every entrepreneur's job to be thinking from those principles, like the very basic principles of like, why are we doing it this way? Like, why have we been doing it this way for 100 years? Like the 12-month lease, like why is it 12 months? Why not 6 months? Why not 2 years? There are reasons for what it's worth, and you were getting at this, and there always are somewhat logical reasons for the way that we do things. But I think the question is like, should they be altered, and who benefits if they are altered, right? So I have a ton of friends who were in apartment leases in San Francisco or New York. Their lease ended kind of in the middle of the pandemic, and they were like, I'm not gonna sign a new lease. Like I'm gonna go use this time to travel around and stay in Airbnbs for a month at a time.
Right.
And they did that. They went to a new city once a month for six months, and maybe now they're signing a lease, or maybe now they're reevaluating. But I think that's a really interesting point, because like they said, I don't want to be locked in because I don't know what's happening in the world. Like,
right.
I'm not going to sign in the middle of a pandemic. Am I really going to sign a 12-month lease in New York City? Like, better be a great deal. So I think the point you're getting at is it's the entrepreneur's job to ask those questions and to really dig in to find out if there's a good reason for why we're doing things the way that we are. And if there's not, and if there's a small window of an opening to change that foundational behavior, can I capitalize and do that?
Yeah, I love that. Don't just change things. Find out really who benefits from that change. So what are you seeing as the trends? Are you seeing how do we look around the corner right now?
Yeah, I think the way we look at this, and as I'm explaining this, I've realized like we look at things, or at least I look at things from a very top-down way. So I look at, like in multifamily, the asset lifecycle. So you're in kind of feasibility and site selection to start. You're actually going to acquire the property, then you're doing a lease up and you're leasing the property, then you're managing it, then you're potentially repositioning it and or selling it, and then the process starts again, right? So like I look at like how are those different phases of the asset life cycle shifting over time, and through the pandemic, for instance. So I would say that to start off on the investment and underwriting side, like data science was huge. I think a lot of people really were, a lot of investors knew that they couldn't be as maybe as careless as they had been in the past, and making decisions without a quantitative backing is, I think, the best way to put it. And I think I'm actually, you mentioned Clubhouse earlier. For what it's worth, I'm actually talking about Moneyball for real estate with one of our portfolio companies tomorrow called Local Logic, and they kind of do exactly what I'm describing. But you're seeing a faith-based shift, I think, in the investment and underwriting side, from like being reliant and making decisions on data, as like that's the most important piece, versus before it was just like, does the data kind of support what my assumptions are? And if it doesn't, that's okay, I can rationalize it. But now if those are in conflict, my instinct about this development area and the data are in conflict, I don't think many people are going to be excited to pursue that investment. It's going to be pretty hard. And your investors are going to ask questions about that. So I think that's one. Contactless access control in terms of trends last year was a big thing. So we all saw the Latch news. They went public via SPAC. Pretty well-known SPAC investor led that deal. Mainstream guy, wasn't a prop tech focused investor. Butterfly MX is another example of company doing access control. I think building management systems in smart apartment. So I think one dynamic was like maintenance didn't want to have to go in and service the units last year. That wasn't an exciting thing to be doing, to be knocking on residents' doors and coming in and out. But for what it's worth, like, people were spending more time in their units than ever before, and probably had more maintenance requests than ever, because they're just using more of the utilities in there. So I think people really try to get optimized with building management systems, like how can I leverage tech and IoT potentially to put some of the management systems on autopilot. So we have a company in our portfolio called Kairos, for instance, and they do water leak detection. And they have, like, from what we've seen, they have the best technical solution that doesn't, you don't need to connect to Wi-Fi to leverage their product. And they basically tell a property when water usage is, kind of unit by unit and at a property level, maybe a little bit uneven and unbalanced, so that they know they potentially are alerted quickly when there's a pretty disastrous water leak scenario. So I think that's one example. I think that virtual design and construction tools were a thing. Again, there were job site restrictions. So an open space or doxel that allows you to visualize a job site if you're not physically there through
Right.
Photogrammetry and technologies like that, I think were pretty exciting. I've already talked at length about leasing automation, but that's, I think, a really interesting piece. I think the last thing is a resident engagement tool. So again, I put this pretty high up on the hierarchy of needs for management companies. And the reason being is, like, the most valuable customer that they have is their existing one. So if you're not engaging your residents and making their lives better because they're spending the most, essentially more time than ever at the properties, you're really I don't think you're thinking about it the right way. So we have a company called Amenify that's bringing services, amenities like house cleaning, lunch and dinner delivery. They do mobile gas delivery to certain communities. So they're bringing this whole suite of services to the property that acts like a concierge, like a digital concierge. We have a company called Stake that is rewarding renters just for paying their rent on time, which I think is a really interesting behavioral and incentive push. To the resident, you get paid cash every month just for doing the things that you should be. And it creates a nice savings account in an uncertain economics environment. So, like, they're solving economic vacancy and really, I think, really developing an interesting fintech solution there. But yeah, I think I'll stop there.
Yeah, those are some great points, and a good segue to our next guest, because she's thinking differently about building those communities, and even all the things that people are not thinking about, even with just simple word of access control. So we'll be talking with her just after our talk. So make sure you stick around for that.
Yeah, for sure.
Talk to me about the barriers to entry. Are there any hurdles that need to be overcome here?
Yeah, this is a really important piece to me, because I think that we all have the ability to influence this as multifamily professionals. There are a ton of barriers to entry for multifamily technology companies. It's very hard to get traction. The cost of customer acquisition is extremely high. It's hard to sell into large management companies that a lot of companies we work with, they want to get exposure to, because the change management of their existing solutions is so high. And guess what? Like, from their perspective, I get it. They don't want to adopt dozens of different point solutions and have to figure out, like, from an IT perspective, how to integrate them all. It's just it's a lot. But the point is like, it's hard. There's a lot of regional dynamics to go to market and selling in multifamily. Multifamily companies are battling for margins. So you're charging a per unit per month basis. Like, you better be able to very clearly explain what the ROI is. And if you're a new company, you don't have a lot of case studies to show that, like, you got no chance. Getting scale with the physical architecture, as we talked about, property management systems integration barriers. I think this is a huge piece to integrate with all all your favorite companies, your Yardies, your Real Pages. They make it incredibly difficult to integrate, costly, from a development perspective and a code-based perspective, very challenging. So my call to action from this piece is like, please help out entrepreneurs where you can. They are trying to make everything better for the industry, and give them a chance. Of course, like, you have to make your own decisions from a financial perspective, but if you understand their perspective and also understand like the importance, if we're going to advance our industry and make it more efficient, make it a better place to work at an industry level, you have to figure out how to support entrepreneurs and help them out, even if it's not your company adopting their solution. Maybe another company who'd be willing to do that.
Yeah, and there's plenty of models of companies that have made that switch. Legacy companies. I look at Adobe and what they've done, just in all the work that we do in the video and creative space. We used to use licenses, and now it's in the cloud, and we don't even think about anything else. But that's helping accelerate the big ideas that people are working on. So, well, we're coming up towards the end of our time together. Are there any final thoughts you want to leave our viewers with?
Yeah. So I think that, again, I think, helping out entrepreneurs where you can, I think that's a big, part of our ethos. And, I think if you're willing and open-minded about embracing technology and thinking outside of the box, Patrick, what you were saying about first principles, at a property level, how can we improve our status quo, our operations, our NOI? And I think if you go down that path deep enough, I think what you're going to figure out is the solution is typically through technology. For different properties, it's going to vary kind of what should be most important to you. And maybe that process is like evaluating your own hierarchy of needs and having that conversation internally. I think there's, for what it's worth, I think there's a ton of exciting opportunities in multifamily tech. I think through the pandemic, we've realized that all is not lost. Like, we're going to be okay. Like, people will need to rent. People still like living in cities. I think maybe there's a shift in which cities are growing and which are kind of staying stagnant. But I think broadly speaking, like, there's a place for multifamily apartments in our world. So from an investment perspective, I think we're pretty excited about investing in this area and continuing to innovate and hopefully making everyone who's listening their lives a bit easier.
Yeah, that's great. And I do want to take time for one question here from our audience. Paul asks, what is the most important criteria you consider for investing in a prop tech company? Is it people, revenue, customer base, or the technology?
Yeah, it's like the age-old question in venture often is, do you invest in the market, or do you invest in the founder at an early stage? We're sector focused, so like I think we've kind of decided like we want to bet on the real estate market as a whole. But I think broadly speaking, to answer this specific question, like personally, I would say that what I'm most interested in seeing from an early stage perspective is that the customers that you've gotten your product in front of, they are blown away by your product, and they're selling their friends. They're paying you. They would do they'd pay you just about anything because the problem you're solving is so significant, and you're growing like a weed because of it. So I come at it from like, what are the indicators of product market fit? And if we can see early signals of very strong growth and traction, I think that I would have a conversation with just about any company there. Now, the team is important, like founder market fit is important. So it's hard to say like which is, where do you start? But I think typically I would start like, show me what the market's telling you. And if the market's telling you great things, and usually that's demonstrated by revenue or customer base, your size of your customer base, that's probably what I would, that's where I start.
Yeah, and we've got a question here from Jeremy, or at least around the barrier to entry. Incumbent players have been known to acquire multifamily tech companies. Are there trends or patterns in the key performance indicators, OKRs, I'm assuming the objectives and key results, and then the annual recurring revenues that would make a small company more appetizing for either adoption or acquisition?
Yeah, absolutely. I think the traditional acquirers, they're pretty well known. RealPage is a big acquirer. CoStar is a big acquirer. Whole host of companies, and we've actually seen a lot of acquisitions for what it's worth this year in multifamily. I mean, even SmartRent wasn't an acquisition, but they had a huge one now that they're going public through a SPAC. And I think that, so like in terms of OKRs to look for in some of the metrics. Again, most venture investors, like, we're super interested in growth. To be a great venture investment, you not only have to be, serving a very high quality product to the world. So you have demonstration and evidence that a product is going to take over in a niche or a market. But you also have to demonstrate that you're going to do it at scale. If you're not doing it at scale, you're technically not a startup. You're a small business. So we have to see evidence of scale happening, and if it's not happening yet, I think there's there are key indicators and KPIs that we would look forward to, like, early on, to know if that's a feasible thing for your business.
Gotcha. And you had mentioned the leak detection company. Can you just mention that? And then it sounds like we probably could have a follow-up show. But if you could just mention that, and then we'll sign off here. We love plugging our startups. Everyone on this call should take a look at Kairos, Kairos. They are the best technical solution that we've seen for water leak detection in multifamily. They have a device that goes at the building level. They have a device, a water meter that goes inside a unit to shut off water if there's a detection of a leak. They have a patented membrane technology that sits below water choke points within a unit, so like below a sink, below a toilet. And they even have, I think it's interesting, they have a solution that is helping diagnose mold at properties, which in areas like Florida with high humidity, it's becoming a bigger and bigger risk. And I think, like, last week I saw there was like a $50 million lawsuit that a resident won because of, like, terrible mold issues in an apartment. So Kairos, like, I look at them, they're an arbitrage play for properties. You can calculate your risk of water damage. Like in multifamily, it's very pronounced. If you have a leak in one unit and you're on floor 10, like, that's not good. You're talking about hundreds of thousands of dollars at least in damage, and you're displacing residents in a pandemic. It's not a great situation. So I look at them as, like, it's a quantitative equation. If you can figure out what you're saving potentially if there is a leak through adopting their service, it's a no-brainer. Wonderful. Well, thank you for sharing the time with us. I know there'll be probably a lot of follow-up questions that people have, but again, a lot of intellect, a lot of great value, and just appreciate you showing up for our viewers.
Thanks so much, Patrick. I really enjoyed the conversation.
Yeah, awesome. Good seeing you, and we'll see you in the next show.